Morning. Just doing a little bit of a hybrid video this morning. So, doing a outlook for one trade that I potentially will have on today, um, which is on oil that I've got open at the minute. That's from a daily candle confirmation strategy perspective. Really not a great deal else on for it at the moment. Um, yeah, gold's taken high as well. So yeah, do a quick outlook on that. Then also going to do a trade review on a short I took yesterday on GBP AUD. And then yeah, just a quick update on P&L from the last little while really, but I'll do back to when I'd started doing the videos, just show the impact it's having so far. Because yeah, quite happy with that really. Quite proud of how that's going. So yeah, we'll get into that now. So for oil, fairly simple, just a daily candle confirmation strategy trade on for today possibly. So as we can see, oil has been absolutely tearing for the last 3 weeks, and yeah, just continuing really to go up. Not a great deal of resistance that we can see here. I would argue, this is the draw on liquidity up at this weekly swing high. Which just going to mark out there. So yeah, my gut feel is that the price is going to head up to here. Obviously, there's still a little bit of a way to go. But yeah, my gut feel is that the price is going to head up to there before it has any major reversal. And as we can say, again, daily very much bullish, has been for, as mentioned, last 3 weeks. Had a little bit of consolidation here at the start of Jan, coming into the new year, but yeah, it's just been tearing since then. So all I'm looking for to do is, after yesterday it had this really strong bullish expansion candle, and candle closed up here at 80.43, looking for today's candle to come down, retest the high from Tuesday, have a 15-minute reaction, and then look to get in a 1-to-1, maybe slightly more than a 1-to-1, maybe 1.1, but around about a 1-to-1 to come up and then take the high from yesterday. So it's a simple strategy, simple trade. So we've got Asia low in place. Asia low has actually been taken in the 5 a.m. candle. So we got the low from that wick there. Then the wicks came through here, took Asia low. So now all I'm looking for price to do is continue further down throughout the throughout the Euro session, then have a 15-minute reaction, give them a retracement, then come up and take the high. That's what I'm hoping for. So yeah, I'll keep eyes peeled. I've got my alert set. So not really anything for me to do, to be honest, until I get my alert that this has been hit. I'll set an alert up here as well, so in case it takes the daily level. If it takes yesterday's high, then the trade's no longer valid. So yeah, got my alert set. All I have to do is just be patient and wait now, to be honest. And then, as said, a quick review on GBP AUD. So this was using the 4-hour strategy that Joe and I use. I can sympathise, this is a little bit of a mess at the minute. So what I'm going to do is clear everything that we've got. So clear my I'll clear my trade, and then I'll clear my Fibonacci. So what we would do, so the breakdown of the trade is fairly simple again. So clearly, daily has been very bearish since the 2nd of Jan. So it's been very bearish for about 2 weeks or so. So immediately the bias is that we're looking for a short. Then we have this swing high in place in a fair value gap on the 4-hour, which is essentially what we're looking for. So we have a fair value gap here, which is essentially where you've got 3 candles, and then price hasn't come back and filled the entire price movement of the middle candle. So for example, in this candle, for example, even though it's a really bearish expansion, there's no fair value gap because the low from the candle before is there, and the high from the candle before is there. So in another sense, the price has been completely filled by the 2 candles either side. Whereas in here, the low and the high didn't completely fill the candle, the price from the middle candle. So that's very simply what a fair value gap is. So we've got the fair value gap. Then we have this swing high within the fair value gap. So the swing high is where you've got three highs from three different candles. So we've got the high here. If I get my little circle tool out, we've got the high here. We've got the high here. And we've got the high all the way down here. So because we've got the middle high is the highest one, that's what we call a swing high. So we've got the swing high within the fair value gap. Again, so I'll mark those both. Actually, no. So yeah, we've got the swing high within the fair value gap. So that's our point of interest that we're looking for. So as I've got marked out, higher time HDF is higher time frame, PI is point of interest. So that's the point of interest we're looking out for. So price had come down and still in a bearish market. Then we had a little bit of news, I believe, yesterday around 1:30, which helped give a little bit of movement to the market to come up and take our level. So yeah, once this point of interest, once prices had come up and essentially hit our point of interest, had tapped it, had taken it out, at that point we're then looking for a market reversal, although yeah, we're looking for a reversal to come down. Although one key bit I have just left out. So the final step we would do would be looking for a discount marketplace. So what I would do is set my Fibonacci from the last swing high before the fair value gap. So the fair value gap, if I mark out again, fair value gap is there. The last swing high before the fair value gap would be this one here, because we've got the first candle, middle candle, third candle. This is the highest high out of all of them in the middle. So this is a valid swing high. Piss off. It's a valid swing high. So I put in my marker there, and we go all the way down to the last bit of movement before that candle that takes out my level. So the candle that takes out my level is this one here. So the last low is going to be this low down here where I've got my cursor. So all I'm going to do is set my Fibonacci from the swing high to the low of the move. And then you can see that price reacted around between 0.66 Fibonacci and 0.786. So I'm going to leave that on, and then we'll go to bar replay tool on here, jump down to 15 minutes, and essentially just look for my market structure shift. So at this point, we do have a small fair value gap here. So all I would be looking for now is price to close below a swing low. So the last swing low we have at the minute is this swing low here, which again, just to further explain, we've got the first candle, middle candle, third candle. The middle candle's wick comes down lower than the first and the third. That's a swing low. So yeah, looking for price to close below that level. What's going on here? I was just playing silly buggers. Right, what's going on here? Right, bar replay's playing up. Right, so sorry, go back to. So at which point? Right, so price has come up, taken our level. And we've had the fair value at close. Then price has closed below here. So I believe, now if I go back a bunch, just going to double check exactly what my entry was on this. So I can't remember if I got in at this candle here. The only thing is that's not really leaving the biggest amount of price. So I can't remember if I waited for a pullback or not. So GPAD, my open price at 921. Yeah, so I got in on a retracement. So I got in around here. So my exact entry was 921. My profit level I had in at 96175 with my stop level at 554. So that was my entry. In hindsight, my stop loss was probably a little bit, for the strategy, maybe a little bit short. Really, I would have preferred that to be somewhere around here, and shot a bit lower. But because we'd had such a strong reaction from that level, and also we had something called an institutional price level nestled in amongst here. So institutional price levels you get at 20 level, 50 level, 80 level, and 00 level. And that's basically their areas where you tend to get pretty strong reactions and major market reversals around there. So we were 3 pips away from an institutional price level, which I had factored in, and essentially we'd come up, taken our point of interest, reacted near the institutional price level, and had a pretty significant move from there. So at that point, I was happy enough with the stop that we had. In hindsight, probably should have had it a little bit higher, but alas. But yeah, and then price just played out, came down, flirted with taking the level immediately, had a little bit of a pullback, and then overnight, I believe we actually had Aussie dollar news at midnight, which then just came out and took out the trade. As I shot for a little bit more than 1-to-1, so shot for 1.12. Really, with this strat, we can shoot a little bit higher, but I was happy with what that was offering, which obviously has played out this morning. So yeah, that's the trade review. And then finally, as I just wanted to touch base on P&L since doing the lessons and the reviews, it's been looking really healthy, which I've been really happy with. So nearly back now at break even, which is really nice considering where I was previously. So if I look from a custom range, which was, I started doing them on the 12th or 13th actually of December, and do that to today. My P&L is really looking quite healthy for that range at basically 1,300. And bear in mind that's with between $230 and $250 risks for the most part. So if I do fairly quick maths, I'm just going to double check what my RR is. So that would be 1,300 divided by 240. It's about 5.4 RR, and that's in the course of pretty much just over a month. If I could do anywhere near 5% a month when things are probably getting going, I would be very, very happy. Because if I could take, if I'm risking 0.5%, then that would be 2.5% on a 250k account a month would be pretty lucrative. Or if I could buy $1 million account, likewise, also very lucrative, especially if I could up that to a percent a trade. So yeah, very happy with how everything's going so far and going at the minute. Got a few trades running at the moment, as you can see, in a little bit of profit collectively, but yeah, we've got 2 that are down. So we've got a Euro CAD and an NZD USD short that are both in a little bit of drawdown at the minute, and then a gold long that we placed a while back that's doing very well at the minute. Although the gold long, I am going to remember my take. Might drop this down to 1.5. Because yeah, I'm looking to get out of gold as it's taken quite a long time to have any major movement up towards taking the daily liquidity that we've got up here. But yeah, that's a quick update on everything. And then obviously the trade review on oil, which is still valid, so I've just got my levels and I'm going to wait and see what happens with that. But yeah, thanks all. Have a good day. Catch you in a bit.